I'm Alan Kenny, Editorial Director with REIT.com, and we're in Washington, D.C. at the Marriott Marquis Hotel for REITWise 2016, NAREIT's Law, Accounting, and Finance Conference. I'm joined by Bob O'Brien, Global and U.S. Real Estate Services Leader with Deloitte. Bob, what are you seeing in terms of development trends right now? What sticks out to you?
From a development standpoint, we are definitely seeing an increase in development activity. We're seeing increased development of apartment buildings, of office, of hotel, of industrial distribution, but not seeing much in terms of retail yet. We are, at least from a ground-up standpoint, we are seeing a fair amount of redevelopment of existing retail, particularly the Fortress Class A malls, as the owners try to respond to changing consumer shopping habits, omni-channel retailing, and the opportunity to attract traffic by creating entertainment options for shoppers. REITs are playing a big role in development activity. We're seeing a number of REITs look at development activity as a way of driving growth, particularly at a time we're doing property acquisitions or portfolio acquisitions is challenging because of high pricing. REITs are using their strong balance sheets and their access to capital to really drive a lot of this development activity. I think it's still a challenging market for private real estate developers to develop. It's still challenging for them to get the financing they need to get something out of the ground, and I think REITs have been taking advantage of that.
Now, you mentioned companies looking for growth opportunities. Are there any that are kind of maybe going under the radar, both maybe in the U.S. and globally?
Yeah, probably when you're looking for things that are a little bit off the radar, it's really outside the U.S. Interestingly enough, we're beginning to see U.S. real estate investors have an interest in India again. Some of the market reforms in India, some of the improved economic activity in India, we're starting to see some U.S. investors nosing around India, and talking to my partners in India, they're seeing increased activity from U.S. investors. Mexico has been interesting, right? It's one of the few emerging countries that are still doing well. And with, probably no longer recent, but they're enacted REIT legislation, their FIBRAs down there, with continued trade across the border with the U.S., it is attracting some level of U.S. investment.
Interest rates, obviously, for a long time cast a long shadow over the REIT industry. Are there any other disruptors out there on the horizon like that you see right now?
Well, one of the things we've seen over the course of just the past couple of years is I think REITs have been challenged to really drive FFO growth. Generally, they're benefiting from very high occupancies, but that limits their ability to drive FFO growth from occupancy improvements. With the new development that we're just talking about coming online, rental growth looks a little more challenging over the next couple of years. And what we're finding is to try to drive that FFO growth, we're now seeing some REITs turn and looking at their cost structures. And what they're finding, and part of it's due to technology, part of it's due to just more sophisticated procurement opportunities out there. Some of it's due to the ability to maybe outsource things more smoothly now than they could have, say, 10 years ago. They're finding some real opportunities to drive costs out of their business and ultimately drive FFO growth.
Thank you so much for your time, Bob.
Thank you.
For more information on this and other REIT news and analysis, be sure to visit REIT.com.